Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Solomon shares his path from Ethiopia to the DC area when he was just 6 years old. Learn how his path was shaped at UVA to consider finance and how his internship at JP Morgan in sales and trading pushed him to consider banking instead. Listen how he shares some great advice on brand name and taking on risk early in your career. Enjoy. All right, Solomon, thanks so much for joining the Wall Street Oasis podcast.
Yeah, thanks for having me.
So it'd be great if you could just give the listeners a short summary of your bio.
Yeah, sure thing. So I was born in Ethiopia, moved to DC when I was 6, went to UVA undergrad, was pretty undecided, ended up going the undergrad business school path, did an internship at JP Morgan in sales and trading, realized that wasn't really a fit for me. And then after that, found my way into Lazard, doing a summer internship, and then ended up accepting a full-time offer to join the Power and Energy Group. A year in, like many analysts, realized banking isn't the long-term path for me. And at the same time, I didn't kind of want to recruit for the mega fun PE shops because a lot of them were only marketing power and energy opportunities. And I wanted to try something new. So began exploring startups and venture funds. Serendipitously, as I began that search, Tusk, the firm I'm at, Tusk, I guess it's not much of a secret, was looking to expand the team. I reached out to one of the partners, began a dialogue. It was a long-winded process, but joined about 3 years ago, and I've been there ever since.
Cool. So let's start all the way back, I guess, in Ethiopia. Like you were there till you were 6.
Yeah.
So kind of not a ton of memories there, probably. But tell me a little bit
about. Not a ton, but when we moved over, it was me and my parents. Spoke in Amharic, which stuck, and I'm super thankful for. As a kid, I'd always say, "Why can't we just speak in English?" And now I'm so happy. Like I have like a second language, and I have 2 younger sisters, and you can see with the kind of age difference, one is 21 and the other is 13. So I'm kind of a native speaker. The younger one can speak, but will like interject English words here and there when she gets flustered. And the youngest one just like understands what you say, but will only respond in English. So it's kind of funny.
Why are you so thankful that you can speak a second language now?
Well, you can take a phone call in the middle of a room. No one knows what you're talking about. Like there's just a lot of like practical reasons why it actually works really well.
Nice. Yeah. No, my mom is from Colombia. She spoke a lot of Spanish when I was growing up, and now I wish it was more. I'm like, why didn't you speak like 100% Spanish to me? Like, what the hell?
Well, as a kid, you're like, oh, this is so much work.
I know. It's interesting. Okay. So you kind of grew up in the DC area, and why did your family kind of move from Ethiopia? Why did you guys come out here?
Yeah. So the U.S. has a immigration program called a diversity visa that allocates certain amount of visas per country. Just a lottery process. My dad just happened to apply that year, and we got it. And at the time, he had a small retail shop, but was like, this is a great opportunity for me and my family. So kind of made the jump without much of a network, kind of like quintessential American dream. So we moved over. We had a few family members in the DC area. If any listeners know the area, there are a lot of just Eastern African people there. But yeah, that was the kind of the genesis of the move.
Okay. And so you're there, you're growing up, you're going, what was that transition like kind of through high school and stuff? Was it pretty easy for you to assimilate since you were speaking English already?
Yeah. At that age, I think you just make friends really quickly. You don't really overthink it. Yeah.
And then in terms of college and starting there, was finance always on the radar, or was it something?
Definitely not. So my running joke with a lot of my friends is, immigrant parents always look at careers in very tangible manners. So it's like, you're a doctor, you make people feel better. You're an engineer, I can see what you're building. So like growing up, I thought I was going to be an engineer or a doctor because that's what I was always told is like, this is what you need to do.
Hmm.
And actually kind of going into UVA, I was going to go into E school and then just realized like, this isn't really a fit for me. And then went to the kind of undergrad College of Arts and Sciences being
But
just
why did you say it wasn't a fit for you? What do you think? Because I think
uh,
there's students in that same spot right now, and they're
yeah,
maybe trying to find.
I think it was more so my parents were really excited. They were like, "You're really good at math. You should be an engineer. It makes a lot of sense." And I just didn't have that inherent passion. And I thought medicine might be more interesting. It also was a little more open ended because you could be whatever major you really wanted to, and then still pursue
Do the pre-med
kind of
stuff.
yeah. So it's pre med the first year and then like did terribly in chem to be honest. So I was like, well, I don't know if this is like
You
the
sound
right
like
path
me. Sounds
either.
like me.
Yeah, and I've always been pretty open minded, and I took like classes that I just thought were interesting. And coincidentally, McIntyre, which is the undergrad business school, had a lot of general requirements that I fulfilled. And going into my second year, I was like, oh, I just really need to take accounting, and this is also an option. So I ended up doing that. I actually have one friend to thank who was like, just take accounting. Like, I think like a lot of people go to UVA because McIntyre is a great kind of program.
Yeah.
But going into it, I didn't really know what undergrad business school was. So I was like, I'm probably just going to be like, pre-med or engineer. So kind of followed that. And then after my second year, I did an internship at JP Morgan doing sales and trading, which was a really quick pivot because like,
Yeah.
you
Tell
know,
me how you landed that. That sophomore summer. It was like early
yeah,
recruiting and stuff.
yeah. So JP Morgan has this program called Launching Leaders,
Mhm.
just focused on getting underrepresented students into kind of either sales and trading or banking.
Yeah.
And I just kind of applied because I thought it was interesting. And I think they thought my application was interesting because it was so all over the place. And I had a great summer there. I was covering fixed income munis. Sales and trading is a really interesting opportunity because if you're very markets oriented, you can just ask a lot of questions. It's a lot of shadowing. But if you're not like already deep into it, it is a tough internship because you're kind of watching someone else and asking a lot of questions. So um, overall, I took away a lot from that summer, but I was more interested in what my friends that were on the banking side and kind of the experience they were getting.
Were they telling you like stay away from sales and trading because
No,
it's a
not at
dying
all.
business?
That actually didn't come up. I was just super green. Like looking back,
Yeah.
I was probably a terrible intern. uh, but I got along with everyone.
Which is expected as sophomores. I mean,
Yeah,
sophomore
I
summer, you're
think,
like a kid, right?
yeah, I think I had a lot of people understood like, yeah, like you're just getting into it. Like just take it as it comes. And like, next summer you'll have a little more direction in terms of like what
Did
you're
you
really.
feel like it didn't interest you because you just didn't have an inherent interest in like the stock market, or like were you trading on your own? Or
Yeah, I think if it was over my junior year summer, I
Mhm,
would have been more interested because I just would have been a little more knowledgeable about it. Like
mhm.
I didn't grow up in an environment where I was surrounded by financial markets or kind of like it wasn't really dinner table conversation. So I just kind of went in there and I was like, I don't know what's going on. uh, and at least with kind of banking, I do think like the work streams are a little different. You get to like even if it's just doing like a logos page or whatever, like you can read about, you can make a pib. It's just a little more tangible. So you feel more involved. Whereas on a trading floor, you just have to be like on and asking a lot of questions, which
Mm.
as a entry point into finance, having a little more background is probably,
That's interesting. Yeah, I hadn't even thought of that. Yeah, it's a little bit more like on you to ask the right questions and
yeah,
like be proactive versus like banking. They're like, hey, go fix this slide.
yeah.
And
And you're like, okay, this is tangible. I know what to do. I'll print it out. Like I'll like check my
right,
work.
right.
Whereas it's like, yeah, why are we interested in like this new bond issuance from like Missouri utilities? Like, I don't know. Like
So, okay.
it's a
So
cool.
that leadership program, you come out of there, did they like give you an offer for the following summer too?
Yeah. So, and I'll be super honest, I didn't get a return offer.
Okay.
So, cause I was probably not great at this job in terms of at least going back to sales and trading. And I was like, oh, it's probably a good idea to like leverage this into like, I firmly believe that when you look at your career, like it's almost more important to figure out what you don't like rather than chasing what you like, because I do think you're just a little more focused. And I knew that, like, this wasn't the right career field I wanted to get into. I think banking will be interesting because it kind of checks a lot of the boxes that weren't there on the sales and trading side, at least in terms of a summer internship. So started from scratch. UVA has a great on-campus recruiting program. I also did a program called SEO, and ended up at Lazard, which was great because it was a generalist program. One of the things.
Can you talk to me about SEO? We're working with SEO actually on a lot of our mentors.
Yeah,
Our
yeah.
just for the people who aren't familiar on the call.
Yeah, so SEO is a really great program based here in New York, and they place highly talented, underrepresented students with front office roles. It's not all investment banking. They do some sales and trading. They have a law program.
Do they drill you on like mock interviews and stuff internally?
Yeah, so that's probably why I did so much better at Lazard, because I went through the SEO program. They had like a training program before the Lazard summer training program, and I came in just much sharper and on top of everything. Whereas, after my second year, I was like, I don't know which way is up. So definitely thankful for that. And then I got, a return offer. And Lazard is interesting because their return offers are just to the firm and not to a group. So you just accept the offer, and then there's a placement process in the spring where you rank the groups, or there's a networking event, you rank your top groups, they rank you, and it's like a kind of like joining a fraternity.
It's a little bit like a dance.
Rush. It's like Rush. Yeah, exactly.
That's interesting. I wonder, so you almost have to accept with the faith that you may get into the right group that you want. So tell me, how did you get comfortable with that? And was there, when they made you the offer after your junior summer to come back, was it, well, actually, before we even get there, tell me a little bit more about the summer. Was it like long hours? I assume Lazard is pretty notorious for good deal flow, but not the easiest place, right? So.
Yeah, I do think Lazard does a great job on the summer internship where no one feels too burnt out. I think you'll probably work on, one or two things that really test you, but I didn't know anyone that worked really hard the entire summer. There were just kind of peaks. Yeah. And the good thing is, because it's a generalist program, you have the ability to kind of take ownership, and if you didn't get any experience with TMT, you could go over there and ask if there's any work. And you have a little more control over your destiny, if you will, in terms of.
How did you think about that? How did you navigate that during that summer? Did you get on something you didn't like and were like, hey, get me more TMT? Was that on your mind?
Yeah, kind of. I there were a good number of UVA people, so they were kind of
I'm just curious, because it's hard for me to remember back so long ago from when I was I didn't even have an internship. So I'm curious, the thought process, how much of your UVA classmates are guiding you and okay,
yeah,
you want to be in, you want to be in this group and not this other group, that type of thing.
Yeah. So there was one in TMT, there was one in real estate, there was one in power and energy, and there's one in healthcare. So all the kind of the big groups, there was someone I could kind of talk to. So I was able to, I worked in healthcare, TMT, and a little bit of FIG and power and energy. But I also sat with the power and energy team. And I think that was actually the biggest driver for me, because I just enjoyed the people that were in the group. It was by far the most collegial and laid back as far as Lazard goes. And I just felt really comfortable with the guys there. And that was actually the driving factor in terms of me ranking it pretty high. So I think my top three were TMT, healthcare, and power and energy. I think power and energy might have been number two. But yeah, it kind of worked really well. And my logic was, it's Lazard, you'll get good experience on the technical side regardless. And if you have to work long hours, you might as well work really hard with people that you already know and versus, working on something you think is interesting, but not enjoying kind of the company, if you will.
Fair. So you sat with those guys during the summer and you felt comfortable. You coming out of the summer, you get the offer. They hey, this is exploding in a week, or what?
No, they were pretty good. They gave me a month.
Oh, wow.
And I think part of it may have been UVA, where they were you cannot do exploding offers if you want to recruit, I guess.
And so what was the thought process around potentially shopping that, and
Yeah, to be honest, I didn't shop it at any other banks. I like did like two interviews with consulting firms, like McKinsey and Bain. Figured that like both options were good, but I just kind of knew that like, and this is still me on the traditional finance path, is how I'll put it, where kind of the people in front of me were like, 2 years banking, 2 years PE, HBS or Stanford. And I was like, oh, that's what I need to do. So I was like, I think Lazard will really help me get into like a good private equity fund. And that's like a more, it's a more well-traveled path. So that was
And
kind
so
of the
you
ultimate.
already kind of leaning banking.
Yeah.
And so, but you wanted to kind of at least do the interviews with McKinsey and Bain, just
Yeah.
give it some thought.
And I think like I'm the kind of person, like many listeners, I'm sure, like I like optionality, and it's just like I want to know. I have as much information as I can possibly have before making a decision. But yeah, ultimately went to Lazard. I like the analyst class. Some of the like people in my group are still some of my closest friends in the city, and I do think like some other larger banking programs, there isn't that level of camaraderie. I'm like
How
three,
big
4
was
years out
it? How
now.
big was it? Like 30 analysts?
Yeah, so the whole class was 30. In
Oh, I
terms
got
of
it. I got it right on. Are you kidding?
yeah,
That was a total
yeah,
guess.
yeah. Sorry. Oh, well, let me rephrase. 30 in New York,
Yeah,
and
30
we
New
had
York. Yeah,
and there were six in my group that I was much closer with.
of course.
But yeah, I just enjoyed that. Like that to me, that was part of the experience, in terms of like enjoying the people you work with, getting close to them, and because everyone I talked to that was seniors, like, yeah, like I'm still really great friends with like my analyst mates, and I'm like, okay, I guess that's like something to look out for.
Yeah, you go through it, right? You go through it together.
Yeah,
The long hours, it's kind of like you're forced to be friends even if you don't get along perfectly. But so okay, so you're kind of coming out of school that senior year. You have the offer in hand. You're basically like loving life, right?
oh, it
Because
was vacation. Yeah. Senior
your
year
senior
was,
year at UVA, not bad. I've
yeah,
been on that campus. It's gorgeous. So it's
yeah, it was, it was unbelievable year, because I was like, I have my job, like, I'm pretty much done, like
what
school
about your
wise. It's
parents? Were they like, what is this banking thing? Are you going to be at a bank
Oh,
teller? What
this
were they
is so
saying?
fun. Yes. Oh my God. So wait, this happened after second year though.
Yeah.
When I told them I was going to JP Morgan, they knew JP Morgan from its retail banking. And they're
Mhm.
like, oh, like you're going to be a banker, like a bank teller? Like that doesn't, I mean, sure. Okay. So the thing is, they're always really supportive. So they're like, oh, that's great. But they were like, but why? Like what made you decide to do this? So yeah, it was really funny.
That's hilarious. Yeah, I think there's a lot of kids that are in the same boat where like everyone associates the retail arm.
Yeah.
And so like Lazard, they're probably like, Lazard, what's that? Right?
Yeah,
Yeah.
exactly.
Okay, so you kind of have a great senior year. The parents are on board, or you're convincing them, and you're kind of approaching graduation. What any kind of last hurrahs before you started? Any trips or anything like that before?
Yeah, so I did a Southeast Asia trip. Went to
Nice.
Chile during the year in the spring, and just really just like kind of enjoyed college without the stress. Because a lot of my friends who weren't in the business school
Hmm.
were either stressed out about applying to law school or med school or all this other stuff. And the one thing I told myself was, okay, like you have it easy. You should totally take GMAT. That's like the one thing you should do. And I didn't do it. I was like, this is great. Uh,
That's
but
hard
yeah,
senior year.
I just think like Charlottesville senior year is a fun time. Definitely look back on it fondly.
Cool. So okay, so you're approaching graduation, you finish, and then you do a little trip, and you kind of get to the city, and the training starts, and what reality sinks in. What's it like during training, and then once you hit the desk, what's it like?
Yeah, training was still a lot of fun.
Yeah,
Like
same with us when we were in
yeah,
Rothschild. Yeah, it's a
yeah.
blast.
I think it's, you have a lot of energy because you're in New York. You're living in New York. You're getting paid, but like it's more or less a 9 to 5. Like it's super chill. And everyone's like ready to go drink every day. It's actually like quite exhausting from the social element, not so much the training. And then we use training the street, so
Hmm.
we had like kind of a, I guess, after like, I think it was a 3-week program, we had like a presentation with a team where I think we were analyzing Coach and Tiffany. I think everyone did that.
Okay.
But yeah, overall it was good. I would say like coming in from McIntyre, I had some of the kind of finance already down, and then having been there a summer. But most of the learning occurs on the job. And I think
were there any kids that came in from like a liberal arts background like me that were clueless, like didn't know any accounting and had to like were drowning?
Yeah.
Or not many?
Really, not many. I think like most of the people that came at Lazard, I think were like, I want to say like
Wharton kids. There's probably some Wharton kids.
Yeah. So I also think like 95% of the class already summered because New York was only 30. So
yeah,
I don't think anyone was completely caught off guard in terms of like what to expect.
Cool. Okay. So you hit the desk. What's it like? Immediately long hours? They ease you in?
I worked on this one deal that like just kind of rocked my first 3 months, and I was actually like, oh my god, like is this going to be my life? Ended up falling through, and it was also in the renewable space, which I didn't really look at all, and it was just a lot. Thankfully, like the second year analyst was awesome. He was also a UVA guy, so we were already friends. Definitely helped guide me through that kind of 3-week period.
Renewables meaning you had never done like a financials for
renewables. It was
you're like, what is this?
It's like it was valuing like wind farms and like rolling them up, and I was like, I have no idea what I'm looking at. And the thing is, the group was just building out that practice, so like there was like one person who really knew what they were talking about, but like everyone else was still trying to figure it out a little bit.
I think I've seen a couple of those models and it's totally different.
It was a cool experience, but like it really added a lot more than just, oh, this is long hours. It's like, oh, it's long hours, and I don't really know what I'm talking about.
Yeah. So okay, so you're there for like the first 3 months. It's long hours, like 80 hours, 90 hours, 100 plus around there.
It was probably in the 90s, maybe like 100.
Yeah.
Like for maybe a 2-week period. It wasn't anything that was absolutely.
You weren't sleeping at the office
yet. Not yet. But honestly, that like set me up where I was like, it kind of toughened me up pretty quickly, and then everything else was pretty good. I had some
surges and stuff.
Yeah, surges, but like just having that early, I was like, oh, okay, like I'm not really phased anymore.
Like, oh, you're like a 75-hour week. I'm good. Coasting.
So it was a good experience. And the great thing is like the culture of the group was exactly the same. So like I was really happy to come back into it, and it wasn't like business formal, like, you know, Lazard's a French bank. So like the consumer team is always like dressed suit and tie,
looking good.
Yeah. And then the power and energy guys were like just much more casual and low key. Still did great work, but like it was just nice to be in an environment where you're not always like on, like in terms of like.
Are the offices still at Rockefeller Center area?
Yeah, 30 Rock.
30 Rock. Yeah, we were at 1251 Avenue of the Americas. So
yeah,
I was right next to you. We were right next to there. That was a long time ago, though. That was way before your time. So cool. So you're doing your 2 years. Pay is, I assume, what was it, like 90 base, 80 base, something like that, and then big bonus.
Yeah. First year was 85, and then went 95. I want to say.
Yes.
And then they gave us a signing bonus, which was nice for the interns.
Is that like 10 or 15 or something?
I think 15.
Yeah.
Which I thought was nice and helped move into New York.
Yeah. The broker's fees are expensive, man.
Yeah. I was like, what's going on? I'm getting robbed.
Yeah.
And bonus was pretty healthy, I would say, for the first year. I'm trying to even think. I think first year is maybe like 150, 170 kind of range.
All in, you're saying?
Yeah, I think so. I don't know.
So it was probably about the same size of the base. That's great, man. That's huge.
I would say, yeah, that sounds right. But it was slightly above market, but not like amazing.
Yeah.
Like
okay.
Relative to.
So around 70 or whatever. Let's just say 70 to 90. And then second year, was it a big bump your second year? Like dramatic bump? Because I know my second year was a big bump.
Really, no, it wasn't as big as I anticipated, but I do think there was something going on with the group where it was like, oh, like
Yeah.
bonuses are getting reworked.
Okay,
But
so
still
whatever,
good.
you're getting close to 200 by that point,
Yeah.
or over 200. So like you're 2 years out of school, you're doing well, but tell me like after that first 3 months, were you thinking at what point were you thinking, okay, private equity? You had said private equity was kind of on your mind and you
Yeah.
were thinking consulting. So was that something that I'm trying to think back in
So
2015, it probably kicked off in like February then, right? Around
yeah, people were getting coffee chats in December.
Oh my gosh. So it was
And
early. Yeah, yeah.
yeah, it was pretty early, and you kind of were reaching out to these headhunters, building a resume without much, which I always found was funny. It was like, oh,
Hmm.
okay. Um, and the problem with it was, and I'm actually really thankful it worked out this way, is kind of the way headhunters operate is like the businesses get someone hired and then get paid. So like it's in their best interest to give you things they think you can get in terms of like, you did power and energy. You should look at all these like power and energy and midstream opportunities. I'm like, I don't really want that. And by kind of like February, I just fully realized that like they're not going to be helpful in terms of like where I was really headed, which was great because then
But
I like,
tell me why no on power and energy and tell me why. Because it was just too limited. You didn't want to kind of
yeah, I thought I
box
really,
yourself in that early.
yeah, I wanted to have a little more flexibility. I was more interested in kind of other sectors. It was just a little too niche. And once you go super deep, it's not like that transferable. So I was like, I know I don't love this enough to like make my whole career around it.
Yeah.
Um, and what I was saying was like after February, I was like, okay, I'm gonna take the pressure off myself and just like think about what I want and like where I want to go. And all these things are 18 months out anyway. So like it's a little, if you know you don't want to do it, there's no point in like feeling I have to get a job just because my coworkers were getting jobs,
Mhm.
which would definitely factored in because everyone was getting offers and I was like, oh, am I like not doing this right? Or like should I just like
There's a
sign
lot
and
of
then figure
doubt. There's a
it out
lot of
later?
doubt.
Yeah. But I think it was
What
a
about
really
the idea of
important.
staying at banking? Would that ever cross your mind, or you're like after the first 3 months, you're like, I got to get out of here?
Yeah, I realized I kind of wanted to get out of here.
Yeah.
Part of it was like, you know, Lazard's a tough shop. I looked kind of like above and I was like, you know, can I really see myself being like one of these people and not these people, but like have the
Yeah.
lifestyle that they had?
Yeah.
And the answer was just no.
Yeah.
I didn't love the subject matter enough. Didn't love my boss enough to like just kind of follow him. Um, so it actually made that decision a lot easier. So kind of fast forward fall of second year, I was like, all right, time to like figure out what I want. And I realized that like I think startups are pretty interesting. And funny enough, I've been in finance, but I never really explored venture capital up until this point. It was kind of this black box. Uh, and I was more so kind of reading TechCrunch and looking at all these startups. And I was like, oh, like I could definitely go work at an early stage startup or like venture seems interesting because their whole job is to like kind of find these interesting companies. The thing is, I didn't want to leave New York because my family is in DC and I like the East Coast.
Hmm.
And this is where luck really comes into play, where I was like, okay, I'll look at like interesting startup opportunities, and as like um, associate positions come up at venture funds, I'll like just start applying to them. Well, they don't come up that often, and like when they do, like it's very like network driven, as I've learned. So I first reached out to all the UVA people I knew that were in venture, and then second, I just started.
How did you do that? Just through LinkedIn? You just found them?
Yeah, LinkedIn is like an amazing tool. Like
Yeah.
I think like if you know how to use it intelligently, also like you just need to find the email format of the firm, and you don't even have to like because I don't believe in LinkedIn messages because I think everyone is spammed by them. But if you're able to like you could find my email and email me, and you'd have a much higher likelihood
Yeah, I
than
mean, you could also you get a decent even if you're not able to use messages. Once you're connected to a profile, you can see the email on there.
yeah
And then also in our company database, there are email formats in there. So, but we don't
yeah
have, so you could even just look there.
yeah. So
I mean,
that was
point is, so you were going emails direct. Were you using anything to like remind yourself and follow up if they didn't answer? Like a write inbox or
Um,
a boomerang or any of those?
Boomerang was clutch. Yeah,
Yeah.
Boomerang was a big one. I'd also preset.
All the
Yeah,
listeners
I
for
always
networking use
I
this.
I also preset all my emails to send at like 7:45, so it would be
AM.
at top of the inbox. But I'd
Nice.
be writing them like after work at like 10, 12, whatever.
Nice.
Uh, and people would think I'm like up and at it and like trying to like get a job,
You
which
should
I
have done it
was.
six. You should have done 6:45, man.
Yeah, my fear was I wanted to catch them before a lot of the daily emails would go out, and I figured like that was a good time where either they were like commuting to work or like just checking first wave stuff.
Mhm.
Um, anyway, there's a science. It's art science. Like use whatever time kind of works for you, but use Boomerang. It like makes your life a lot easier.
Yeah, boomerang, or I use one called write inbox. It's great too.
Yeah,
Same thing. Basically, you
yeah,
can set reminders, automate it, even automate follow ups, send it, schedule all emails, all that good stuff.
yeah,
Yeah, it's like it's seriously a game changer. There's even templates you can put in there. So
yeah.
like our whole process of like onboarding mentors, setting up the podcast. I don't know if we followed up with you, but like that's all templated. So people are like, click, 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 change the name,
Yep, done.
like boom, 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 it sends it and it's done. Instead of people like having to even copying and pasting takes a lot of time.
Yeah,
So it cuts all of that out. So okay, so you kind of reach out to UVA alum. You start chatting with some people in venture. They're like, hey man, there's like no seats, or like it comes up once in 3 years.
yeah, yeah. They were just like, I'll keep you in mind. Definitely like keep reaching out to people. And my entry point was actually not through like the UVA connection. Someone like a friend reached out to the girl who sat next to me being like, hey, there's this like new fund coming up. Like, let me know if you're interested. And she knew I was interested. And she was like, oh, you should totally reach out to this person. So got in front of it, try and it like the venture time cycle or recruiting cycle varies drastically based on fund size. Larger funds, if you're like, for example, like an NEA or this is more growth, but Insight, they have a cadence that they follow. And like, if you're able to get in on that, that's great. But I want to say like anything sub 150, it's just like
150 for the listeners. 150 AUM, assets under management.
yeah,
Yeah.
or fund size. It could just be. I'll just say sub 150 fund sizes.
Yeah.
So it's not super structured. So there's a lot of luck that goes into it. Anyway, the firm I was at announced that they just did a first close of Fund One. I was like, oh, congrats! It seems really interesting. Got in front of the managing partner. It took about like 8 emails, but finally got like a conversation. And he was like, oh, like I'm not looking to hire immediately, but I will. So like keep in touch. And I like kept in touch. And I think, and this is probably like one of the things where over eagerness may hurt you, where it's like, you got to have like the right EQ of what the right cadence is of following up. Cause there's a fine line of just being really annoying
Totally.
and being really motivated. And for me, that was like kind of like once a month, once every 6 weeks.
How did you know that? How did you develop that EQ to even know that?
Because of the other side where other people would reach out to me about like, oh, would love to hear about your experience. And I was like, this is like really exhausting. Like you're on my radar. Like I know like when this comes out,
Every 2 weeks, you're like, hey, how about now? Hey, how about now? You're like, oh my gosh,
and I think like that's a really big part of venture because like, I mean, a big part of it is like talking to founders, getting them to like you, getting access to a deal, and that no one really talks about. I used to hate the word EQ because I used to think it was like BSC, and of course everyone knows how to talk to people, but that's not true. Like some people are just kind of like better at it than others, and that's part of kind of your sell as a candidate. It's like, look, I got in front of you, I was persistent. And people have this false notion of venture being like Shark Tank, where you're just sitting there and people come in and all the great ideas are like coming to your front door. And that's just not how it happens. So on really great deals, you have to like find your way in, getting an allocation, whether, it's using a VC contact to get you into like the syndicate or like reaching out cold to the founder because they're about to raise and you heard that through someone else. So that level of that's almost part of the interview process because if you're hiring, you're like, oh, okay, this person gets it. Like I think like you could.
So 6 weeks even surprised me. It sounds like that's pretty frequent. I mean, how long did you have before you were done with your second year? And did you know like, hey, I want to be out by years two?
the first, I like connected officially in January. My second year program was ending in June.
Oh, so
So I
only
knew,
6 months before you're done.
yeah, yeah. And so I got to the point where I was like comfortable, like if I didn't have anything lined up, it was fine. I knew I could like get a job. Like I would be able to get a job and pay my bills, but I didn't want to just take a job just because out of the fear of it.
Why did
And
you say you could get a job? Could you have stayed
sorry,
at Lazard in
so
the third year?
yeah, I could have, but knowing myself, I was like, this is how you like kind of fall into the slippery slope of not like do it, like you're making decisions out of like fear as opposed to like I'm genuinely interested and I'm confident that like if I'm persistent enough this will work. And
Yeah.
to some extent that is kind of what venture is, right? It's like placing a bet, being contrarian, being like I think this will work and kind of running with it.
Hmm.
So anyway, I didn't have to figure all that out because it worked out really well, and began like a formal interview process in like late February, March, where they were like, "Oh, we're looking to bring someone on." It involved like probably like 5 interviews and a case study. I pitched a like esports company called GenVid, which who I think they just raised a Series C actually.
Hmm.
So like, and my logic there was actually I know like everyone's gonna pitch something something that's always in the media, and 5 years ago esports wasn't a popular thing yet, and I played a lot of Halo growing up, and I was like,
Perfect.
oh, like this is totally a great idea, like I think it makes sense, and the partner didn't really believe it, but he liked that like I went deep on a space that he didn't think about. I showed that like the underlying numbers are really strong in terms of like engagement, what the average like kind of user looks like, and I think that's what really got me the job. In addition to like answering a lot of like behavioral
What
questions.
what made you think of doing that esports thing? I know you said you played Halo, but was there some thinking like
Uh,
I gotta come at this at a slightly different
yeah,
angle? Was
yeah,
that in your thought process? And then why that company? Like how did you even source that idea?
yeah. So from a sector perspective, I definitely read an article about esports.
Hmm. And you thought, that's the light
Yeah,
bulb went off, and you
it's
said,
like,
huh.
oh, that's interesting. Most people kind of glance by it because it was like, oh, sure, people playing video games, that's not real. And
Don't
I just,
people pay to watch other people play
yeah,
video
if you
games?
if you look at like Twitch figures, the average session's like 90 minutes. Like people are on it for a while. So I like looked up all those numbers and I was like, oh, this is really interesting. And I wanted to have an infrastructure style bet because like I knew that although I liked it, like pitching it to an investor, you don't want to go like application layer where it's like so focused that you're like, this is the one thing that's gonna like really work.
Like a
And
specific league or a
yeah,
specific
or a
team?
specific goal, yeah, a specific game or publisher where you're like, this is also keep in mind these are startups. So at the time, this was a Series C company. So like it'd be like a very narrow bet of being like, this is the greatest thing ever. And my
Yeah.
logic was, this is already niche. I think like no one's really going to be talking about this space, and you might as well kind of go infrastructure approach where their business was basically enhancing the audience experience. So if you think about how streaming works now, it's very like two-dimensional where the screen you're watching is just a mirror of like the person playing, and there's no like dynamic viewing or anything like that. And what GenVid did or does is they allowed you to like they kind of paired with the publisher so that you had the ability to control camera angles, follow a specific player.
Hmm.
So like enhance. So like it's kind of like theater mode and how Halo or all these games now where like you're kind of like, oh, like it can like look at this specific part of the map. And it was kind of geared to the more high frequency user, not necessarily fully competitive. But anyway, I was like, oh, this is interesting. Like you should totally look at it. Didn't really like believe in esports, but like the fact that I like had like logic behind my investment thesis was grounded. It was like, if you believe this is
Did they push you on like the financials? How is this ever going to make money?
not really. I mean, it was this seed stage company, and like kind of like they're basically like making money off the publishers, and publishers want this because they'll see more streaming and like
Yeah.
they'll kind of improve their reach. But it wasn't too hard on that. It was more so like, I mean, at the seed stage, part of it is also like, how big is this market? Like,
Did they do a lot of seed, or were they interested in seed?
yeah.
So it was the right stage.
Yeah,
Okay.
yeah. And the market was big, and they understood that, and kind of there was a clear path to how they could be profitable. But unlike a private equity interview, no one's going to be asking you super hard technical questions. It's more like, do you understand do you have a really good thesis about like how customer preferences are changing? And this is specific.
They didn't make you build an LBO. They didn't make you.
Yeah,
no, just kidding.
it would have been funny, right? Like, you're like, yeah, I made up all these figures. So yeah, it was an interesting.
That company is now doing a Series C, or they just did a Series C.
Yeah.
So they're doing well.
I mean, they're growing. I haven't looked at the revenue figures now.
Yeah.
Now they should make a lot more money, but
that's interesting. I think Gary Vee, didn't he have an investment in like one of these like Minnesota esports or something like?
Yeah, I mean, it's pretty big topic now in terms of either owning sports teams or.
I wonder how much are those franchises worth right now? Do you know? I know it's in the billions of dollars for the big franchises, for like NFL franchises, and
yeah, I think.
Is it like a couple $1 million for those?
No. I actually think someone bought a team for like close to 100. So like, it's not nothing. Okay. I would probably say some of these teams are valued more than like some like WNBA or like MLS teams that are like smaller and not
smaller markets. Yeah. Sorry, just a little tangent there. I think it's pretty interesting. Okay, so you're kind of you're doing this interview process. You have the several rounds, 5, like very unstructured. Were they giving you kind of indications that you were doing well, or did it take like 3 months, or what was the deal?
Yeah, it probably took about 3 months, maybe a little over. I mean, I got the offer in mid-May, so like we're talking.
You had no time.
A month. Yeah.
So what was going through your head? Like, what if I don't?
I was getting nervous. Where I was like, I was looking at startups where I knew like I would just come in either as a growth person or someone who was just doing more biz dev, and I was like, that could be like something I do that like kind of will give me some experience, and hopefully we'll be able to pivot over. So I had some other leads that were like pretty.
Tell me about how you looked at those, and why growth, and why and what types of startups at what stage you were looking at to kind of hold you over to potentially.
Yeah, they're all like,
was the pay like $80K base and just basically like minimal bonus with some options?
Yeah, I ended up getting one offer. I think it was actually pretty good for a startup. It was 125 base, but like no real bonus. And I was coming in mainly I work under the CFO, so it would be a very finance oriented role, which made sense. Everything else was kind of all over. I would say like, yeah, you're probably looking at 85 to 100 being like kind of the average salary. But the reason I I got the offer, but like, and chances are if I didn't get the offer, I probably would have just accepted that job just because I didn't want to. Knowing me, I say I would have been okay with the risk, but I probably wouldn't have.
Of like not having a gig and just stopping?
Yeah, because I think it would have been enough of a bridge where I like kind of am transitioning into a different ecosystem, and then I could continue looking at VC opportunities and stuff like that.
Got it. So you're coming up in your second year. Did they know you were leaving? Did you tell them? What was the?
Yeah. So I told them, I got a job at this fund. And it's funny, I don't think anyone in the firm, or not the firm, at least that group, went the venture route. I think it was always like, I'm going to go to a hedge fund or a PE. Yeah. Actually, some people went corp dev at like Fortune 100 companies. But they're like, oh, and venture is really interesting because, especially now, there are a ton of seed funds, a lot of money out there, and you generally don't know about a lot of these, especially if you're coming in from a investment, like from an investment banking perspective. Sorry, I got distracted.
No
so they were like, oh, I've never heard of it. Like, what are they in? And at the time, like it was still a new fund, so there weren't any like marquee names. And this is actually my advice to a lot of people, where if you're thinking about joining a firm that doesn't have, like, don't be so worried about name recognition, especially if you're coming from banking or like, let's just talk about just my experience at like, I think Lazard checked enough boxes where, okay, this person's smart, this person works hard, they can get a good job. But I do feel like herd mentality is so strong that often you go take a job just because you feel like socially it'll be better acknowledged than something different.
Mm-hmm.
And I can tell you now that I going to the shop that, wasn't a billion in AUM or whatever, I know like 10 times more about venture, both from a like legal term sheet, like understanding, just because you're solely working with a managing partner that like is like, hey, you need to do this, versus a distributed team that's like, 4 layers where you're only really making landscape pages and like,
and you have a huge legal team taking care of everything for you.
It's you're drinking from a fire hose. But if your end goal is like, I want to like raise my own fund, like ultimately, like it's either you're going to learn that really early by taking a risk on a firm that's new, or you just have to kind of go through the longer path of being at like an established manager. And until like you're like, a junior partner, you're not really going to be looking at the LPA or like, what, MFNs are, and a lot of the other stuff that like, I think people.
Tell me what's LPA and MFN, what's that?
Oh, it's a limited partnership agreement.
Okay.
So, like, yeah. And MFN is most favored nation. So when you're raising a new fund, like you're kind of working with your anchor investor. And I do think my experience was probably like a little closer to the fire than most people, where even if they're at a new fund,
were you the only associate brought on for, and there's two?
So it was one of those things where the partner was just like, hey, like, you're smart, you can hold your own in a room, I need you to come with me to this LP meeting. And I was like, oh, and LP stands for limited partner, so it's one of our investors. Handled my own really well. And he's like, oh, great, like you should like actually be more involved in this, I can use some help. And that escalated, and that was about 4 months into the job, and helped raise our second fund, got like super involved in that. And I think like opportunities like that are only available if you take the risk of like obviously going to a smaller but higher growth place. It's exactly like you would with venture. Like it's funny that someone whose job is to like find diamonds in the rough or like, take really high conviction bets only wants to go to the blue chip name. It kind of like doesn't really tie.
Doesn't jive. It's not a startup. It's not a startup venture. Yeah. That's cool. So, okay. Sounds like you got a really great experience and you were promoted pretty fast actually. Tell me a little bit about, sorry, go ahead.
Yeah, that was solely because of how close I was to a lot of these. Yeah.
Tell me a little bit about like what your day-to-day is like. So is it like, how much are you on calls with founders, sourcing versus, actually trying to close deals, dealing with the lawyer, looking at agreements?
I would say it's probably split like a third sourcing, taking the first meeting and bubbling up what's interesting, a third diligence and putting together the investment memo. It was interesting at the early stage side, most people, their investment memos are in Word and it's more of a narrative versus like a pitch deck, which took some adjusting, but I actually like it more because you kind of tell a story, like it kind of ties a lot. It's just a little cleaner. Mm-hmm. And the last third is like the infamous other bucket, which includes like some fundraising stuff, some like random operational thing because it's a lean team, and like make sure this capital call goes out, work with our third party administrator, stuff like that. And those are like kind of the three streams. And some days it's all sourcing, it's all diligence, or it's all kind of like fundraising other. But that's how in the long run it'd probably like break out.
Got it. And so what about like workflow and like hours and stuff like that? I assume that it wasn't.
Honestly, like it's good. Like compared to banking, like
it's like you work a 70-hour week and you're like, oh, that was a hard week.
If anything, I probably should have like adjusted to the new norm faster and not been like, oh wow, like this is so great. Like I'm not working like 90 hours a week. And you get into the office at 9, leave at 5 or 6. Like no one's like, there's no real FaceTime, and VC is a kind of people-oriented business. So like oftentimes you're not in the office because you're meeting someone at their office or grabbing coffee or whatever. Right. And it was just really refreshing to have that kind of autonomy where people trusted that you do work, and there was no need to be glued by your desk.
Hmm.
So lifestyle
Any
is a big perk.
So people who want to follow in your footsteps, any advice besides like just start networking early within the venture
Yeah.
community for any analysts trying to make the same jump?
Start early in terms. I wish I knew of a little, like a lot of the resources that are available. So like John Gannon is a guy that posts a lot of venture jobs around the country. I would just like subscribe and check it frequently and keep applying,
Hmm.
because it's just a slower process. It's not like I want a job, I'm going to get one in like a few months. It could happen that way. It could take
Yeah,
a year.
even check WSO. We do occasionally have a venture gig come up through
Yeah, yeah, yeah.
our network and our job stuff. So yeah.
And I think a bigger part is just like begin cultivating the relationships that you already have, whether it's through work or people that were previously at your firm, and just kind of build that out a little more. Because ultimately, you hear the most interesting jobs come through the grapevine and not necessarily like a formal post. I do think VCs are being more transparent now, but still they have their own pipeline of like people they're looking at closely, because I've told them you should totally,
Like referrals and stuff. Yeah.
yeah, watch out. Like Bob's looking for something new, like he's great, and it's just how it works, where he'll get an interview and be looked upon really favorably. And like, if you just apply cold, like you got to work harder. You got to have some kind of in, and there aren't that many jobs. So it makes it that adds to it.
Any advice around the specific? So you mentioned a case earlier. Any specific advice? And I know you said kind of don't make it so mainstream. That's good
Yeah.
advice. But any other advice around specifically how to structure it, how to make it look like an interesting idea? Like, did you drive all the way into like the unit economics, all that good stuff?
Yeah, I would say, if it is at like kind of the series A or B, like that is definitely something you should look at. But like, and I didn't do it this way, but looking back, like if I did it as a narrative, it probably would have been better. Just because this early on, there aren't enough data points to make like a great presentation. It just comes up a little choppy versus like if you just did a 2-page memo on like, this is why this is a good investment.
Mm-hmm.
And the other part I did not do was kind of the financial side of it, which was kind of like underwriting it to the deal. And if it's looking at like a Series C company, just like do the simple math of like, yeah, you're getting 20% ownership here. Like for this to return the fund, it only needs to get acquired at like $500 million. And we've seen a lot of exits in this space for kind of this amount. And I think that really ties a bow around it. And I think a lot of people don't do that piece, which shows that like you're an investor and not just like, oh, I think this idea is cool.
Got it. Yeah, almost like where's the exit here?
Yeah. And I think at the seed stage, you kind of have to just tie it to market size and like what you've seen. There's no like financial math you can do to be like, this is how much it's worth.
Fair. Okay. Anything else before we call it? This has been great. Anything else you'd like to share with the younger listeners before the pod ends? Like advice or looking back on your path,
looking back, just step a step further back and don't be so worried about like kind of that whole name brand thing. I honestly, especially if you kind of look at all the firms you do want to work at, chances are like, you need to be somewhat contrarian, have that kind of bullish attitude and kind of your ability to like drive value, and not necessarily look for the validation of just the logo of like, I think these are all great places. Like you should go work at a really big, successful fund. But ultimately, I think like the real success and money comes in from taking the bet no one wanted to take and making it work. And I think like most people realize that, I would say like later in their 20s when they enter their 30s and are like, I'm going to spin out.
I 100% agree with you, man. I mean, look what I did.
Yeah.
Like, I had a PE gig. I had gone back to PE probably after Wharton, but I already had this little thing growing with Wall Street Oasis. And it's like, why wouldn't I just focus on that? It's like upside's uncapped and I don't have to do all the politics. I'm free. I can travel.
Yeah. And you're like, just ask yourself, like, what I'm doing is I'm just kind of betting on myself and knowing that like, these are the 3 things I want to get out of it. If I can do that, that's great. And if not, I know I'm like, I have the skill set and I've built the experience so far to really like reset, whether that's business school, go back to banking. And I just think people don't do that early enough. Like, I think like after doing that,
especially bankers, man.
I think it's because you're kind of like groomed in this like herd mentality, high pressure cooker environment where you feel like, you've always been competing with these peers and everyone's been fixated on the same goal, and you just get tunnel vision and you lose out on like, well, like look at what you
Yeah,
could be doing.
I see that. I've been seeing a lot more though of kids who've gone to banking, they've done the PE at the mega fund, but then they're
Yeah.
like, that's enough. Like they go try to do a
Yeah.
search fund. I've been seeing a ton of search fund this. I'm running a search fund.
Yeah. Yeah.
How
Yeah.
much of that do you think is like because they just like didn't want to do the mega fund anymore and they actually are looking, they want to be more entrepreneurial versus like they were pushed out and they didn't want to go to business school? Like I often am thinking to myself, I'm like,
Yeah, I think the harsh reality is a lot of the people I knew that did kind of 2 years banking, 2 years mega fund, like coming back to the mega fund is also hard. Like there is like, you know, capital scales really well and they don't need to hire a bunch of people just because they're raising another $20 billion. And also like once you're senior, like as long as things don't blow up, that's like a cushy job. You can kind of like sail off and you
or
don't
are they going
really
to
need.
bring on a ton more partners
Yeah.
and split
Yeah.
the pie?
And that's why like you see a lot of spin outs. Like,
Mhm.
I made, you're a principal at like Apollo or whatever. You're not really getting, you don't see the next 5 years you getting to that stage. And you're like, well, I'm going to just go do a search fund, or I'm going to like take one of my colleagues and try to like do my own thing. And a lot of successful funds have been created that way. But again, it's kind of you betting on yourself and not necessarily, removing yourself from the rat race more or less.
I think that's hard. It's especially hard if you wait super long. I think you're
Yeah.
thinking about it the right way, taking the big swings early.
Yeah.
Um, because if you fall down, you don't have a family, or at least I don't think you do have a
Exactly.
family.
Now, now,
Yeah.
now, yeah, now it's like, oh, I failed, and thankfully, like, I didn't have any debt after graduating undergrad, so like, you really like don't have that much. You don't have many excuses, and the longer you wait, you're like, oh, one day I'll do this, and it's like, yeah, you got to do
Yeah,
it
and I think it's
now.
good. I think the banking, I call it the banking boot camp. The 2 years is good for you, I think, because it
Yeah,
kind of resets your perspective on what hard work is too. And
for
so then
sure.
like if you
And the
want to go
level of
be,
like professionalism. I do think
yeah,
like
absolutely.
no one thinks about that, where it's like you just know how to like conduct yourself in an office and in a meeting. Granted, like banking doesn't do a good job of like getting junior people engaged, and that's part of the issue of the hierarchy. But at the same time, like you know how to read a room, like what's going on, the numbers, and I think
Hmm.
people don't give that enough credit.
Yeah. I mean, I know based on like the searches we run, there's everyone wants that experienced analyst that like 1 year and like
Yeah, yeah,
that
yeah.
isn't super expensive yet, but has like the chops. They can do
Exactly.
the modeling and all that. That's
It's
like a
like very coachable. It's like, okay, I have like something I can work with
yeah,
here.
it's interesting. But yeah, so yeah, kudos to you for not chasing the brand and the prestige and going for swinging. It sounds like you've had an awesome experience and like got a ton of exposure early to doing everything.
Yeah. Yeah. No, it's been, you know, I will say hindsight's 2020. In the moment, at some points, I was like, wow, like I didn't really think I was going to be doing all this. Like I kind of want to just focus on deals. And now I'm like, oh wow, like that was great. Like I'm really happy that that kind of worked out.
Are
So
you able
like,
to share anything on pay at all? Just ranges? Like,
yeah,
it was
I will.
obviously a pay cut, I assume, from
Yeah, I would say like venture expected pay cut unless you're at like a really big fund that's
yeah.
doing more growth oriented stuff. But
Like
the
an
value,
NEA, like an NEA might be a pay increase, but any sort of
it depends what bank. I would say probably flat, like
okay,
at best if you're at like a top paying bank.
got it. Okay.
But the value of venture is more the network and access to all the people,
Hmm.
and you should be able to monetize on that. Like the 2 years of mispay, I don't think are worth like, I'm very close with the CEOs in our portfolio. I know like other investors, and like you got it, you kind of get what you put in, but you can get a lot because like
Hmm.
shops are lean. You're working closely on deals, and if you're at like a bank, like you don't really have any relationships. In venture, like you actually can cultivate meaningful relationships.
Yeah, I think there's something to be said for that. But tell me a little bit about what your thought process is in terms of now that we're on this topic and you talked about like what you can get in and taking the lower pay at, going to the smaller place. Tell me what your thought process is in terms of there being so much money chasing like on the seed in the Series A. Like, do you feel like Does that scare you? Like, are valuations so crazy and people are just getting money thrown at them? Or now with COVID, it's
Uh,
more interesting?
yeah, now it's more interesting. I'd say seed valuations have come down a lot. Obviously, and like it's interesting. The really good companies are getting funded, and they're not like it's like we know this is a good company. We just need ownership.
Yeah.
And it's these horizontal venture strategies are the ones that are really interesting now. And by that I mean you have like a Lightspeed that has an early stage fund, a growth fund, and an opportunities fund. So like their goal to make money is like I want to put in like $40 million when this thing is like at the Series C. What is like a $1 million seed check?
It's nothing
to me. It's optionality, now I have like an inside track on this company,
right.
And you get into this like interesting AUM game of like I just need to keep growing this fund, and if you're a senior partner, like you make a lot on fees.
So yeah, I see you're saying. Do you think the horizontal strategy of like the places that are just doing seeds are a little bit at a disadvantage because they're not able to do the huge follow-ons potentially on
yeah,
successful bets?
I think some founders though understand that, and they understand it's an optionality check. And I think what I tell founders is like when you're thinking about round composition, like just ask yourself how much skin do they have in the game and how important are you to them? And that's generally aligns with like how much they value you. Obviously, like a check from Lightspeed or NEA is great. They have really deep pockets. They can backstop you.
Yeah.
But at the same time, it's not like you're going to get a general partner working hand in hand with you until you like kind of reach scale and they're like, oh, now you have my interest, versus like if you're at a leaner, if you're choosing kind of like a newer fund that is like $100 million and they're putting, $3 million.
How does venture think about companies that get the seed? Like, let's say it was a Wall Street. If I had taken venture funding earlier, let's say, for whatever reason, because I sold some sort of dream of, hey, we're going to explode this. But we didn't, and it grew. Let's say 5 years down the road, it's doubled in size. What do they call it? Like the sleeping, whatever. Like the shadow. It's definitely not a home run. It's in that middle range. It's not a loss.
Where you're just kind of making money, but there's no like immediate exit. It's just called a lifestyle business, and at that point, like venture like if as a fund,
don't they want out though eventually?
Yeah, what happens is like they'll try to get something on the secondary. Or if you're a cheeky founder, you'll be like, I'll buy you out for like 20 cents on the dollar, and they need to return that capital. So if it's not a liquid name, you basically buy your company for really cheap.
Well, maybe I should do that. No, just kidding.
Yeah. But yeah, it is interesting. I think founders need to.
Because I've always thought to myself, there is an opportunity for some tuck-ins, but it's too small for most places to care. Like
honestly, like if you have a nice business and like
don't mess with it.
If you're not interested in growing at a really rapid clip and selling, like you're just going to lead into a contentious relationship. Because like
totally.
The venture businesses, I'm raising capital from LPs. I have a 10-year fund life. I have maybe a 2-year extension on that.
Like, let's go.
Yeah, it's like I'm here to make money so I can like raise my next fund. And there are challenges in the business where it's like, it's year 7. I need to return capital.
I have seen some venture structure, maybe they don't call themselves venture funds, but like it's more of a lifestyle type thing where they're looking to acquire for like a 15, 20 year. It's like a family office, and they're looking just for a cash flow business.
Yeah, I think we're definitely seeing the rise of like investment company, holding company style, where it's like, and I think that kind of ties into like the search fund idea where people are like, there are a lot of like holes here where it's too small for a big, not a big, but a middle market shop. Totally. Venture's not interested, but like, a lot of family offices I think are kind of playing around that space.
Yeah, it's interesting. You can get a 20, 30% return on your money. It's not bad.
Yeah.
Yeah. Anyways. Great. Well, Solomon, any other words of wisdom? Sorry, I kind of like kept you on for longer. I thought it was interesting.
Really enjoyed the conversation. But yeah, that's that's kind of my high level. It's really
your guidance, your wisdom to the young chefs out there.
Yeah. Don't start early is all. Just start early.
Very good. All right. Well, thanks so much for taking the time. I really appreciate it.
Yeah, thank you.
Cheers.
All right, have a good night.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick@wallstreetoasis.com. And until next time.